In a huge move to gain back investors' trust, Peloton hires the ex-CFO of both Spotify and Netflix as their new CEO. And they unveil some cost-cutting measures. We're going to talk about all of that in this video, so stick around. Hey guys, welcome back to TipRanks. I'm Richard Allen. Thank you so much for joining me for another video. Wow, what a day it is for Peloton, up over 30% today. Crazy movement from Peloton. They announced that they're going to be hiring the ex-CFO of both Spotify and Netflix to come in as their new CEO and fix the company, shed a bunch of jobs, unfortunately, and cut a bunch of costs as well. But investors are absolutely loving it. Over the past 5-day period, Peloton is up almost 50%, but still down almost 80% over the past 1 year period. So there is still a lot of room for this stock to run, trading under $40 right now, but off of those highs of $155 for Peloton set within the past year. So crazy movement for Peloton. But let's jump in. Let's talk about the details of exactly what Peloton will be doing for these cost-cutting measures. Peloton announced today that it will cut 2,800 jobs, or about 20% of its corporate workforce. Barry McCarthy is the former CFO of both Spotify and Netflix, and he will become the CEO and president and join Peloton's board. Peloton expects to slash roughly $800 million in annual expenses and reduce capital expenditures by about $150 million this year. Now, we've talked a lot about Peloton lately, so I would love to get your opinion on whether or not the company is doing enough to gain investors' confidence back. Remember, if you take a peek at the charts, take a close look here. This stock is now up almost 50% over the past 5 days, but if you look over the past 1 year period, this stock is down over 80%. If you take a peek at this 52-week range here, guys, this stock got down to $22 per share, but has been as high as $155 per share. So this stock has a lot of room to go up before it recovers. But do you think they're doing enough? Please let me know down in the comments. I would absolutely love to hear from you. I like this move personally. I really do. Hiring the CFO of both Spotify and Netflix. I think this guy knows what he's doing on the finance front. He knows how to cut expenses, and I think that's a good thing for Peloton right now. I think they had no choice but to ramp up too much too fast because of the pandemic. But now, as the pandemic is subsiding a little bit, especially here in the US and around the world, people are getting back out there. They're going to the gyms more often. Definitely not selling as much equipment as they used to during the pandemic. So they need someone to come in and make some calculated decisions on the expenses front. It always stinks when people lose jobs. We don't want to see that, but it may be necessary for a company like Peloton, and investors certainly like this decision. At one point, as of I was recording this video, they were up over 33%. Looks like we're trading right around 31% up right now. If we take a peek at what the analysts have to say, the analysts over the next 12 months are giving this a moderate buy based on 20 analyst ratings with an average upside of 8%. But I anticipate over the next several days, we'll see some new price targets for Peloton, and I'll be sure to let you know if these this upside increases or decreases and what the analysts think about this decision from Peloton. Guys, please let me know if you learned something new or found any value in this video at all. I would absolutely love to hear from you down in the comments. And as always, I'll see you in the next one.